Have you asked yourself, how much money do I need to buy a home in San Jose? Do you know how much down payment, how much money you need to save? All these factors, we're going to break it down for you today. I'm Teresa Wellman with homeownerexperience.com, and today we're talking about first-time homebuyer loan options. How much money do you need to have to get into a property for the first time? So we're going to go through a couple different scenarios. First, I always get asked, how much money should I save before I buy a house? Well, buying a house is a huge long-term commitment, so you want to be in a really good financial position when you do that. So first off, I highly recommend that you have at least 6 months of living expenses in your savings account above and beyond your down payment. So we're going to estimate that at about $5,000 a month. And then if you've got, for example, maybe some car payments and some other payments, maybe it's $7,500, maximum $10,000 a month. So let's estimate $50,000 of emergency funds set aside that you don't touch, plus your down payment. So now there are several different loan options. There's a 3%, 3.5%, 5% down that are lower down payment options that we're going to go through today. Now, ultimately getting to a 20% down payment is ideal because then you won't have to pay mortgage insurance, but almost nobody has, say, $100,000 or more to put down into a property right away. So we're going to talk about some affordable options beyond that. So if you've got your 6 months emergency reserves and you've got $25,000 in down payment money, you could be buying a condo. So let's go through some of those numbers. Let's say you're looking at a $500,000 condo and you're doing a 3% loan amount. So that would be $15,000 in down payment, and we're going to allot $10,000 in closing costs. So that would be $25,000 money in to buy the condo, plus your $50,000 in reserves, which could probably be a little smaller if your expenses are lower. But I'm going to say at a minimum of $75,000 in your possession, you could buy a condo. That's all it really takes. It's a lot of money, and you're not putting that all into the condo, but you need it for reserves and to be financially conservative and ready. And banks are going to look for that money when they qualify you as well. So how much money do you need to make in salary to be able to buy a house in San Jose? Well, banks are going to qualify what they call debt to income ratio. Your debt to income ratio is typically at 40 to 42%. So if you're making, say, $10,000 a month, then $4,200 a month can go to payments. So that would be your loan payment, your car payment, any credit card payments, all of that stuff. So as you can see, not having a car payment, not having credit card payment really helps your home purchasing power. So let's assume you don't have a car payment and you don't have any credit card payments. You're just looking at $4,200 a month to purchase a property. We're going to go through a scenario at the end of this video, breaking down those numbers on what you can afford, but you definitely could buy by making $10,000 a month. So ultimately you need to make between $120,000 and $128,000 a year to qualify for a property. Now that doesn't have to be just your income. It could be your partner or your spouse or your sibling that you're going to go in and buy a property together. So that's combined income, right?
Now, if you're looking to live in one of these areas for 5 or 7 years or more, then you definitely should consider home buying. I welcome you to check out my website at homeownerexperience.com and search the homes available for sale there, because I can help you navigate neighborhoods and communities and schools and comment on those properties so we can have an actual discussion online about your particular search and we can refine it particularly for you. And if you're ready to get started or getting close, say 3 to 6 months away, we should definitely set up a time to do a buyer consultation where I can share you my tips and tricks for navigating the home buying process.
So let's go through a couple different scenarios. Say we're putting 3% down on a $500,000 property, then that could qualify you for some special programs if you make under $133,000. Bank of America has some first-time homebuyer programs that allow you to buy pretty much anywhere. And the beauty is they're going to give you $17,500 in grants to help with this. That means you're going to put less down payment. They'll give you a $10,000 down payment credit, as well as $7,500 in closing costs. So you're going to owe minimal, and that's going to decrease your amount, but you are capped at that income level. Now, you may be also eligible for some other options if you're buying in different areas of San Jose that are classified differently. So you're definitely going to want to reach out and talk to a lender about that. I've got some great Bank of America contacts I can connect you with about these special programs. Now, let's talk about a 3.5% loan. That is a typical FHA loan. Now, most condo complexes, which is what you're going to have to buy at a $500,000 price point here in San Jose, are not FHA approved. That's bad. So it's nearly impossible to navigate the FHA project approval during a loan transaction or during the actual loan process of 30 days of escrow. Plus, FHA mortgage insurance is upfront, really high, and the annual is much higher than other mortgage insurance for standard and high balance conforming loans. So I'm really not going to suggest FHA in the San Jose area. It's not really a sweet spot for us. So let's talk about standard conforming and high balance conforming loans. You can get a minimum of 5% down payment for those particular properties. So it's not going to matter what your income level is. So really that 5% number is a number you should keep in your head as a down payment. You can actually get a loan amount all the way up to over $1 million with just 5% down, which can cap your purchase price at $1.145 million because that 5% down payment plus the loan amount will cover that. This does require mortgage insurance, which is going to add a little bit to your monthly cost. And we're going to break down those numbers below, but there are no income limits. So this is a great program if you haven't bought a property yet to get into something to start building your equity here in the San Jose area. So let's go through some numbers. If it was a $500,000 purchase with 5% down on a conforming 30-year fixed loan and the property is a condo, then there could be an additional hit to the rate if it's your high loan to value, that 42% that I talked about. But the cash to close is under $38,000. You need about 6 months reserves of $30,000 to $40,000, $50,000. So if you have $75,000 or so, again, you could still do this 5% and it doesn't matter your income level. So let's summarize these payments to give you a little bit better scenario and talk about next steps. In this scenario of 5% down on a $500,000 property, your principal and interest payment would be $3,200. The property taxes each month would be $520. Then you would have to pay a $50 per month HOA condo insurance policy, like a hazard insurance policy, $106 in mortgage insurance, and a $500 estimate in HOA dues. So your total payment would be $43.77 to own a condo of $500,000. And again, you're going to need between $60,000 and $75,000 in reserves and down payment money to get into that property. Typically, buyers who are purchasing in this price range could be lower income, so they could qualify for those grants we mentioned. But if you don't make under $133,000, this loan option still will work out for you, just wouldn't get any of those grants. So do you think these numbers are doable for you? Would you like to explore more home options in San Jose that might fit your budget and see what $500,000 could buy you? Well, feel free to reach out, call or text me at the number on the screen, and I'd be happy to guide you. And if you think you're going to be buying a home based off these numbers or some conversations that you've had with others, then we should get together. If you're thinking about in the next 3 or even up to 12 months, let's get together for a buyer consultation via Zoom or in person. In that appointment, I can work with you on some tips with lenders, tips on what neighborhoods to look for, things to think about and consider when you're looking at HOAs. All these different tips I offer in my buyer consultation. So you want to really get together and get those tips so you don't make those common mistakes. You can book a buyer consultation at the link below. If you've got any other questions, feel free to comment below or reach out directly. I hope you appreciated this information and found some great value. Please like and subscribe.